And today we're going to go through support and resistance and what is a valid support and resistance zone and how we can plot those zones and find them and identify them easily. So we're going to jump into the charts. We'll do a little bit of background on support and resistance first from the Forex Bible, and then we'll go into the charts and I'll just go through and show you some examples as usual. Okay, so very simply, support is a level below current price where multiple buy orders have action over a non-specific duration of time. A lot of people ask, well, how long should I be looking at for it to be a valid support and resistance? It's not necessarily the time period. Don't forget, the larger the time period, the stronger that support is, because prices come back over a longer duration of time. And a shorter time period, that support would be weaker. But then it doesn't have to be a set period of time. I'm not opening up the charts and saying, right, I need to go back a week now or 2 weeks. I'm looking at a chart, I'm plotting my levels accordingly. And if that happens to be a 2-week period, a week period, or a year period, so be it. I will recognize that once I've identified the zone, but I'm not actively looking for a time specific period. Okay. If support's below, that means resistance is of course above. So that's the ceiling. That's where price has hit multiple times and there's been sell orders there, and price has of course dropped down. So very simply, support will be below. So support's the floor, resistance is always above current price. So simply buying and selling at support and resistance levels sounds too easy and too good to be true. That's because it is. Buying and selling at these levels alone is not a consistent strategy for long-term profits. We can, however, use support and resistance as a confluence. Now, we discussed confluences yesterday. That trend lines is one of those confluences. Support and resistance will also be a confluence that we can use to help us detect those high probability trades. So that's what we're going to go through now. Very simple example here of support because it's below the current price. So we can see here we've got 3 touches, like our trend line. 3 touches creates a valid support line. 2 touches could be classed as kind of like a minor support. Then we can project that through and anticipate a 3rd touch later on in accordance with our other analysis. And there's a nice example of resistance. Now it's important to recognize that price will not come back perfectly every time and just pinpoint touch these zones. There'll be manipulations. Price will try and push through. Price will try and break above, then fall back below. You'll see a lot of this happening on the examples that I'm going to show you on the charts. So as a rule, a 3-touch horizontal zone where we can see price has reversed at all 3 touches qualifies as support and resistance, okay? Just like trend lines. However, we can use single touch and double touch previous highs and lows as minor support and resistance levels, but only act as a weaker confluence in comparison to a 3-touch support or resistance level. So for example, we could be looking to take a trade. We go for a buy, for example. There's already a high there. We can project that through. As price moves up, that'd be the 2nd touch. So we can expect maybe some sort of resistance there, but potentially could just break through. It's not going to be very strong. So we've just got that one high at the moment. But if we had 2 touches there and our price coming up, our trade is going to be touch number 3, then yeah, we can expect a bit more resistance there and we need a bit more momentum to try and break through that. So that's how we can use it as targets as well, which is really good. A horizontal line can cut through price action. It does not have to be a perfect, continuous, undisturbed line for it to qualify as support and resistance. Many people try and find perfection in the markets. The markets are not perfect. They're very much imperfect. So we need to keep an open mind all the time. Don't try and find the perfect line which is not being undisturbed, because you won't find it. In some very rare cases you might, but try not to be too picky, so to speak, in looking for those perfection pinpoint touches. Okay, it's a zone, a wide zone. I'll show you some examples as well. Okay, as traders, we'll never buy directly towards resistance and sell directly towards support. So this is support, price is here. I don't want to sell towards that support because that's going to try and stop price from moving lower. Same as resistance. If price is here, I don't want to buy directly towards that resistance because that's going to stop price from trying to move higher. So that's why it's important that we know how to mark these zones. Then we can understand, okay, I'm not looking to buy right now. I need to see it's a resistance zone break, for example. Okay, so I'm going to open up the charts now. Okay, so I've just picked up a random chart, ends at DJPY. We've used Euro USD for many examples, so I'll just change it up a bit, and go from there. So first of all, I'm just going to explain a little bit about the more key levels. So you hear the expression key levels quite a lot. Now, key levels are kind of higher time frames, longer period of time, so they're strong. Okay, it's got a key level because it's a strong level. So what would I say is a key level on this chart? So I'm looking at price at the moment. Okay, if I zoom in, you can see across the bottom here, we've had multiple touches through this zone. So what we could do as support, we just project this line through. Look how disturbed this line is. This has spiked through and come back. We've had some more touches here and there. Another touch there, another touch there, another touch there. This is weekly time frame, by the way. But every time prices came down to this region, it's failed to continue lower. Prices came back. So this is telling me, well, this is a really strong level. 22nd of June 2009 to 11th of June 2012. It's like a three-year period. So that's a pretty strong zone. So what we can actually do, project this zone through. Funny enough, prices tried to come down to this zone now. Hasn't quite made it. So this is where we could potentially see some pullbacks and then finally a drop to test this zone. So this would be classed as a key level. Okay, it's multiple times prices come back. It's happened over a 3-year period, so it's a strong level. It's important that we recognise that. So higher time frame, ends at DJPY. Yeah, this is classed as a key level of support. So when price, we can either use this as a target for a sell trade. When price gets here and we see a specific pattern form or something like that, and we can see the support has actually held. Okay, it hasn't broken, it's held. We can then look to go for a buy trade from this support region. Interesting. So that's a key level. Prices come back multiple times on the higher time frames to test the same level. Very simple. It's good to have these marked on the charts. You don't have to keep marking these all the time because it's not often price will have huge moves like this on the weekly time frame. It can take a long time for price to get down to here. So you could have this on like this for a month before price finally got down to there. Doesn't mean you'll be waiting a month for a trade. Just means that you've got this on as a guide. So it's good to have your outer guidelines on, just like we said about with the trend lines. So again, above current price, we've actually got this level here. Now again, for horizontal level, yeah, it's valid, okay? But this big spike through here, and we got this high here. We can pull a horizontal through. It's valid as a key level of support because we came up here once back in 2007. We came back in 2014. Okay, the 7 years difference between these periods when prices touched once, came back, tested again. Didn't even fully come to the high either. So this is where I actually started bringing the trend line element like this. Remember, just looking for guides, outer guides on the higher time frames. You can actually start doing stuff like that. So I'd actually like to use a trend line there. I would still project this through because if this trend line breaks, where can we expect price to go? To this level. Okay, so we're just looking for areas on the higher time frames, and the higher time frames are the easiest ones to mark than it is the lower time frames. But the higher time frames are looking for those extreme highs and extreme lows where prices come back multiple times. Now, what would we do? Because we haven't got enough data now, have we? If price actually broke out of this level, well, we'd actually look to mark this zone, just a single zone. It's the last low. We can mark that level, project it through, and then we can potentially look to short all the way down to it. Be a big trade, but it would still have that same guideline element. Okay, I'm fully aware of this down here. Okay, this would potentially be my target, or maybe just before, and then we can start to look to trade towards there, this support, which could come down for its second touch. So just because we haven't got multiple touches down here, this is the only low that we can go off at the moment. So we can just mark that on. Okay, I mean, it was back in like 2009. We can mark that on. You know, we're now 2020, that was like 11 years ago. If price came down there to test the low from 11 years ago, we're definitely going to see some sort of sensitivity. And then even if it's just a small bounce up, a few hundred pips before it broke it, we still see some sort of mini reversal element there, if not a full reversal. Okay, so this is key levels. We're looking at the extreme highs and the extreme lows on the higher time frames. You can go out to monthly if you want to. I don't go out to monthly too much. I'm mainly looking from the weekly, daily, 4 hourly, hourly, then down to the 15-minute. So very simply, if we come out once, we come out twice, we can use our trend line there, which we went through in yesterday's lesson. And again here, multiple times, you have multiple touches there over, this one was a 3-year period. We've had multiple touches, we can project that through, and this will act as a nice zone of support once again if price comes back down to that level. So that's how you plot your key zones. It's really important that we understand that these key levels, we're not going to be changing them often. They're just there as a guideline. So for example, if you never marked your key levels and price was up here and you had a lower time frame, let's just draw this on. So say price came up to this level, you didn't have anything marked on. You didn't really look at a higher time frame, you was on a lower time frame. And you had a little bit of a continuational pattern around here. You went for a buy trade. What's the likelihood of price literally just coming up, hitting this region, and then just going, pushing straight back down? Yeah, there is a pretty good chance, because we're going to come back up and test this high from 5 years ago. So that's why it's really important that we're aware of these zones. They're not going to be hit all the time, but we need to be aware of them just to help use as a guide for us as traders, keep us out of bad trades and help us find good trades at the same time. So key levels are mainly weekly. Then we go down to the daily. You'll see me do this on a lot of my YouTube analysis videos as well, where I go down the time frames and then just start fine tuning. So what we're looking at now is, okay, what other levels have we got through here? So we can actually see now, I really like levels when they were resistance and they become support, for example. So we can see here we've came up for a few days there. We've actually found some resistance. Prices pushed down, came back up, broke through, came back and tried to push back through, but couldn't. So pulled back again. Now if we zoom in, this is the great thing about when you're back testing, you start noticing all the little things. Broke back above, pulled back to retest, like I showed you on the trendline video yesterday. And then we use this level as support now. Came back, used the level of support again. Came back, used the level of support again. Finally broke through. And then what we can do, we can actually project this through. Go, well, would you look at that? It's now acting as resistance. So it's not a coincidence that price is coming above and below these levels, and these levels are acting like a magnet for price to be attracted to. So literally, we broke out, we've come back again, we've come back again, we've broke out, we've came back up pretty much near it. Now it is a zone, so even if you just took it to that low, we did come up again once, twice, we came back again 3 times before price making a descent, as so. So this is why it's so good when you can go down the time frames and just fine tune, because if we did have, for example, we're looking at a trade here, we're like, okay, look, potentially take a trade from here. Would you take a trade off these spikes? No, you wouldn't. You'd look for this level to be at least hit or tested before looking to take a short, because you need to see. There we go. And it's just spiked above, which is what I always like to see. A little spike above, got a bit of that high test, and then price dropped. So that's what we're looking for. Price to come back to these levels. So a lot of people might have took a trade here, just below. Sure enough, she spiked up, tested this whole region we've had marked, and then dropped. And this is just by fine tuning on the daily time frame, which is a really simple process. You don't need to be too picky. I mean, look what I've got here. I've got price spiking through here. I've got price spiking through here. But price has been attracted to this same level multiple times. So don't try and be too pinpoint. A lot of people use lines for this, which is really hard to gauge when you do a line, because prices are going to come back perfectly to a line. It's good to have a bit of a cushion. So let's move on. So again, through here, we can see another level, right? The top of this zone we marked on a weekly time frame. We can pull this through, And again, it's no coincidence that price has spiked down to this level, spiked down again. Zoom in. Came down to this level again, tried to break out twice, couldn't, came back up, finally broken out. And then she's pushed down since the breakout. So there's no coincidence that that price has came back to that same level multiple times. It's because we've seen so much repetition here in terms of test. Price finally found the fuel to break out. We came back for a big retest, came back again, tried to break out twice here, failed, and then finally is broken out. So what we're kind of looking at here is, okay, price at the minute, this is current price, is trading between these two zones. So we go down to the 4 hour time frame, like so. Then we just start fine tuning a little bit. Okay, look, we know we're in between these two zones. Are we going long? Are we going short? We're kind of in the middle at the moment, which isn't ever really great. We have kind of got this huge flag which is going on here, which could be a potential continuation pattern for a short. Then we just start plotting some more minor zones through here. So 4 hour time frame, price has spiked through, came up twice. We could have pulled that through and projected it. What have we got? Again, test. Bit of an uptrend going on through there. Trend line broke, pulled back, got the engulfing candle, prices dropped. So this is how we're kind of using the trend lines in conjunction with our support and resistance zones. What we would have expected a drop here, but it broke out at this level. This is kind of a pullback. Then we've tested this 1, 2, third time, and then we got that drop. Then if you really want to start getting precise, you go down to the hourly time frame, and you start to do exactly the same. Just pulling price through levels like this. So again, we've got a touch here. We bumbled around here. We came back once, twice, 3 times. Broke the level. We pulled back. And then price dropped. This is when you really start fine-tuning. When you can start using the weekly, daily, 4 hourly, and hourly all together. That's when good things start to happen. That's when you've kind of got your outer guidelines marked on. So let's... take a further look at some minor levels. Just on that hourly time frame perspective. We'll just go right back. Because the minor levels help us, like I say, just pinpoint those nice entries and act as a really good guide. So for example, here, we'll just start working through a little bit now. We can pull this little level through, and would you look at that? Well, we can even take it through a little bit further. Look, so we kind of had this bit of a spike here, 2, 3, 4th spike, huge body of candle though, then broke out, came back to test it twice, 1, 2, and then price pushed off. 2 very powerful pushes there as well. We've got this big candle here and this big candle here as well. So this is a perfect example of resistance. Okay, so this is resistance above current price, then became support. So once price breaks out resistance, come back to test it, it then becomes support because it's below current price. These are the setups that I like, where we've seen a proven resistance zone, so we know it's strong. When price breaks out of that zone, there had to be a lot of buying pressure in the market to try to find the fuel to break through that level. Once that level's broken, what happens? The level's broken. We've had a bit of a rally, which we've seen here. And then price needs to pull back. While price is pulling back, we've had push 1, push 2, push 3. There's your Elliott waves. People are now looking like this is actually at a pretty good price. We broke out, we've had the rally. Price has come back to a lower price now, a good buying price, to also test this sort of resistance as support. Great, I'll take that. They're going for a buy. Sure enough, we've had a big candle there and a big candle there. What time today? So it's 2 o'clock in the afternoon. So it's unlikely to be New Zealand news. And 3 o'clock in the afternoon, yeah. It's unlikely to be New Zealand dollar news. That's usually really late evening or early hours of the morning. So a really nice example of when support, resistance becomes support. And I'll find some examples where support has become resistance. They're the best ones because it's this through here, okay? This price action, we've had multiple tests, has already proven that this is a strong zone. Then once we break it out, we come back to test that zone, we know this is a strong zone. We know it held some weight. So then we're looking to capitalize on the move. We've also got a bit of a flag pattern there as well. So we've come down and then we've broken out, came back again, and then finally continued to the upside. Double taps are always a good sign. A double rejection is better than a single rejection. Let's just find some more examples as well. What's this through here? Minor zones are great because this is where you're going to fine tune your entry as much as possible. As much as possible. I mean, this is a real minor zone just coming through here. Just pull that through there. Hourly time frame. You can see multiple touches. We broke the support, came back to retest as resistance, and then price dropped. This is just a very simple minor zone. Even would have had that little bit of a downtrend there as well. So we could have looked at something a bit like this. A bit like that. Okay, so very simply. So downtrend 1, 2, 3, 4, multiple touches there. Respected the downtrend, broke the support, came back, tested it as resistance, and the downtrend then dropped. That's what I was going through yesterday on the trend line session. And these examples will literally be everywhere. So we just take away the larger examples now. And just pull this little level through here of support, broken, came all the way back, tested as resistance. We had that double tap again, haven't we? 1, 2, and then price has looked to drop down. We actually came back up again here. Come back up again here, drop down, spiked up again here, drop down. So this is when you really need to put in the time back testing. So as soon as you flick open a chart, you go, oh yeah, look, pull that through, do this trend line, etc., etc. Then that's when it becomes very automated for your mind and your habit. It just becomes, you look at the chart and you go, pull that through, do that there. Your higher time frames would have already been done, so you pretty much know what way you're looking to trade anyway. So you've got this nice big level through here like this. Price didn't quite come all the way back to test it. And sometimes price won't. I feel it's important that I tell you. Sometimes you're waiting for price to come back and test the zone and it just won't fully exhaust, which isn't a problem because then what we can do is wait for the next wave and catch it again. So don't ever have that fear of missing out. This is a really nice level as well. See 1, 2, 3, 4. Finally broke out. Pulled back, and then we had a nice big drop there. Again, another nice level here. This is just 4-hour time frame. Just going to pull this through like this. Multiple times. Look, 1, 2, 3, 4, 5 touches there. You see it's a good level. Multiple bounces off. And then price continued all the way back up. I actually really remembered this section back in 2018 because I remember I was looking at this with a big double bottom, and I remember I can't remember why, but I didn't take the trade. I had this kind of trend line going through here. I was looking for a nice long position at a lower time frame plotted out. Didn't take the trade, and look at that go. Yeah, I was remember when I look back, I was like, I was actually going to take that trade. I can't remember why I didn't take it. I just really like this level. There's multiple rejections and it was a really nice zone. Yeah, we won't ever catch them all, will we, right? So what I need you to start doing is go away, practice, plotting these zones like I'm showing now, but also just practice plotting them along with your trend lines. So let's see what we got here. Let's see if this works out, right? So we got your downtrend through here, which I showed you on yesterday's lesson, like this, bit of a downtrend, okay, going through. And then what we do, just looking at these little levels like this coming through. Let's got this little level through here, touch 1, touch 2, bit of a third touch there. We broke, came back, rejected once, rejected twice, price dropped. What happens again? We then mark this low. These are just minor levels. Same things happened. We broke, we pulled back, we dropped, came all the way back to the downtrend, then we dropped again. Eventually, the level has to break, right? So we came back up, rejected, we dropped down, then we finally broke the level. And then the process will pretty much repeat itself. So you have a bit of an uptrend, a bit like this. Then what will happen is start marking these little levels out. And I'll see here where we've got such a steep uptrend, not coming back to hit the resistance as support. It's just coming back to the trend line. Let me just remove the EMAs for a sec. There we go. So this is an examples where it will not always come back. I mean, here we have quite nicely. Don't forget, trend line is just a guide. Okay, if we just get a little pierce through like that, I'm not massively bothered. Don't forget, we've got to keep an open mind. I mean, if we do want to start getting fussy, we can really fine tune our trend line. We had a bit of a low test then and price pushed up. That'd have been a nice little trade there. What are we on 4 hour time frame? Then got to catch huge moves. Still 70 pips. Then once again, the process can continue like this. It works great when price is trending. So we've actually got a little bit of level coming through here, haven't we? It's not the tidiest of levels. But this is why I just like going to a random place so I can show you what works, what doesn't work, you know, what's the messes you can get away with, rather than trying to show you textbook stuff. You need to be able to see real life market stuff, which is happening, real life price action. So here we've got test, we've had a bit of a dip through, price pulled back. Again there, when we broke it, we pulled back to test it, then came back here. Okay, so at this point in time, the trend line would have actually been like this. Why? Because we've got test here, we've got rejection there. Price drops. Perfect. Then we can look at the next level, which would have been around about here. We've got rejection, we broke, we've retested, we've came all the way back. This time, the downtrend's actually broken out. So now, when this happens, these are all minor zones, okay? When this happens, we're like, okay, price is here. We're trapped in between, at the minute, this horizontal resistance zone and the breakout of this downtrend, which can act as support. So when this happens, I either want to see the price break back in and retest like so, and then drop, which she has, or a complete breakout of this level. A complete breakout of this level, and then start to form that new trend line. So it would be a bit like this. Complete breakout, pull back, and then away she goes. Something a bit like that. Okay. Not much of an artist. So that's plotting minor zones. We're going to another pair and we'll look at some key levels. If we say, for example, let's not pick an NZD pair. Let's go CAD Swiss. So let's remove drawings. Let's just get rid of this alert. So again, we're going out to the weekly time frame. And we're just looking for any areas where price has returned multiple times. So instantly, what sticks out to me at the moment is like this. And we see this low here and this low here. Pull that through. Look at that. Literally test, 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 test. Strong level. If price comes back up to there, we could be definitely looking for another short from that level. It's very far away, yes, but it's good to have our guidelines on. Again, we got these lows coming through here like this. So price currently is. What's happening? We're finding some support down there at the moment. As you can see, multiple spikes from the weekly time frame. So then what we can do, we can go on to the daily, just fine tune this. Now we've got our key levels. Got a bit of a level coming through here on the daily. Now, there's no point putting it right the way up to touch this low. Okay, because we're only interested in the one which is closest to current price, which is this level here. So we've got 1, 2, potential third touch inbound. Will price come back up to test this level before either breaking out, continuing up, or coming back down to test and eventually break this level. So we go down to the 4-hour time frame. Again, just looking to fine tune once again. We know we're testing this level around here now, so we don't need to leave this big blocky zone on there. We know we're testing that zone, so we can just get rid of that. Fine tunes, we got 1, 2, 3 coming through here like this. We broke out, we come back to test as support. So resistance is broken, test as support. What's happened? It's came back and broke back out again. So what can we potentially expect? A push up to retest for either a drop or a break back through. Put our trend line up. Look at that. So what can we expect now on CAD CHF? Potential nice pullback before rejection here and a drop. Perfect. So we just wait for that to play out. We go down to the hourly time frame. Can we fine tune anything else through here? It's not a bad level through there really. Got a little bit of a zone here at the moment where we can see we've had a spike, another tap, little spike down in that level there. We're kind of at that level at the moment. So if this level does break, let's draw it on. Okay, we're going down really fine now on the hourly. So you can see here, 1, 2, 3, 4, 5. Broke. We'll come back to kind of retest this level. Can price continue up to test this more major level and then drop? That's what we want to see. How we're looking in terms of smaller downtrends at the moment. Kind of broken out, a bit messy around there. We can see getting a lot of sensitivity around there because we have this level coming through. So we need to wait and see if price is going to continue down or break out to push up to this level before the drop. So all we've done there, just to recap, at this level at the lows here, we can see that price is currently rejecting this level. Price is pushed up, it's pulled back, broke that minor zone through here. Now the question remains, okay, we know we've rejected this bottom level. Is price going to continue to the upside, or are we still going to get another push down before a push back to the upside? We need to wait for price to tell us. We can't just say, yeah, it's a buy trade because we've rejected this level. Look how choppy price has been down here, where she's found so much sensitivity at that support zone. So we start to decipher the information as we go down the time frames. We're on the 4-hour time frame now, and we can just be patient and wait. So price comes up to here, we get rejection. We can see we just trade price back down to this level. A little 1 to 2 trade there. We're not looking to, you know, swing it for weeks and in swing trades. We just catch small breakouts. If price does come back above this level and pulls back, we can catch along, which would be my favorite option because we know we're rejecting this big zone down here, which we've already drawn on. It's just waiting for that correct confirmation to be able to take those trades. I really enjoy looking at the higher time frames because you know that they're strong. They tell you a lot of information, as do a lot of other time frames, but the information I look at on the weekly is so clean, clear and concise. I mean, this is very clean, isn't it? It's very clean. Weekly low tests here. It's just very clean. It's not massively choppy. So we can actually really pick out some key features of the chart, which is always good to see. So that's key levels, extreme high and lows on your weekly and daily time frames. And then we've got our minor zones on the 4-hourly and hourly time frames. Then start adding your trend lines, etc. This is stuff you need to back test. It's really important. Got a bit of a downtrend coming through here. Anything too exciting? Kind of the end of the life of the downtrend, isn't it? And then price is just moving sideways for a bit. Trying to have a bit of a breakout here of these lows. Looking like she does want to come back. Let's So that's just looking at the weekly time frame, just deciphering the information that's there, that's available. We get out of that noise. Have a look on the hourly time frame once again, just before we start to look to take some questions. So this is the downtrend here, like this. Okay, we've got 1 potential 2 point of contact. What could we have done here? We could have simply just pulled this through like this, and then so we wouldn't have actually had the trend line there just yet, because we're waiting for price to come back. Once price hit that level and then dropped, that would have created a 2 point touch trend line. Could have pulled that through, pull this under like this. You can see here we've had touch, touch, we broke through, came back, touch, touch, came back, touch, touch, touch. So this is a really nice zone through here. What's happened? Price has come up, hit the trend line, hit this zone, and then literally just dropped. Came up, got these nice spikes, spike, 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 which I showed you in the Japanese candlestick tutorial. A nice high test engulfing candle down, price has dropped. So this is how we're going to start to use our trend lines and support and resistance together. Stacking up those confluences, trying to give you as much successful opportunity of a trading day as possible. You know, because not all days are going to be good trading days. Sometimes the markets just don't want to play bull. But if you can eliminate that as much as possible and have the right information, a good strategy, and then yeah, you'll have a much more beneficial trading career. So again, we kind of got this little level coming through here. See, we kind of got this little bit of a downtrend coming through. Again, it's just a guide, but we need to understand we are making lower lows, we are making lower highs. This level coming through here like this. Sure enough, what have we got? Got this bit of an even star, 1, 2, 3, and we've got that nice big drop. So using your horizontal support, resistance, and trend lines together works as a pretty powerful confluence. If you just go through, you can just get familiar with just plotting these zones so much. Here, little zone of resistance, 1, 2, 3. Broke out, come back to retest, retested again, and finally shut off. So this resistance became support. And here again. So we can just, like this. 1, 2, didn't quite come down there. We broke out, we came back to test once, twice. Lovely tweezer tops there, by the way. 1, 2, that's the sort of tweezer tops that you want to see for rejection. 1, 2, drop, and then continued. So minor zones are like 4 hourly and below. I don't go too in depth. I definitely don't do support resistance on 5-minute time frame. 15-minute, I'll mark some just for just to really try and pinpoint my entry. Not massively reliable, but still, it's good to, once you get used to plotting the support and resistance, you know where it is and you understand how it works, and you're finding these nice zones where we've got support here, which has become resistance. Then you can really start pinpointing your entries. So practice. Support and resistance is a pretty simple one. You can make it a lot more easier for yourselves if you do put in the time. So practice now support and resistance along with your trend lines that we looked at on the last tutorial, which is going live on YouTube tomorrow. So if there's no questions, we'll end the webinar here. Keep a look out on YouTube. I'll keep updating as they're going live on YouTube. And then tomorrow, what's it tomorrow? Friday. We're not doing a lesson tomorrow. We're doing the next lesson on Monday. Okay, so thanks for tuning in, everybody, and I'll see you all then.